That 2025 U.S. Canada Summit, hosted by BMO and Eurasia Group, features speakers including CEOs, policymakers, entrepreneurs, and specialists in the financial market. Big theme, examining the evolving Canada-U.S. relationship. We are joined now by our own Lindsay Biscaya, who's on the ground and standing by live. Lindsay, take it away.
Thanks, Andy. Yeah, well, we're joined now with Glenn August. He is the founder and CEO of Oak Hill Advisors, joining us here at the summit. Thanks so much for taking the time. It's good to see you.
Nice to see you, too.
Let's get right into your line of work, which is credit, right? So
yes.
The credit landscape, like what does that look like right now?
So just a quick frame. Firm I run, I founded 38 years ago. It's called Oak Hill Advisors. We run $100 billion of capital, and we focus on credit strategies, which basically is buying typically below investment grade risk, targeting 6 to 15+% return, depending on liquidity, depending on the type of credits that we invest in. It's U.S. and Europe. It's liquid, it's private, it's structured, it's corporate, it's hard asset, and U.S. and Europe. And so we've built a large firm over the years, and we manage money for a lot of the largest pension funds around the world, and sovereign wealth funds, and individuals as well.
A lot of uncertainty right now around the world, right? I mean, what does the credit landscape look like right now for you?
It's funny because people talk about uncertainty, and yet if you look at the markets are at all-time highs. And so the market, I believe, is looking through that uncertainty. And while there's certainly in the U.S. some softening indicators on the employment side, there's also a lot of growth. The GDP growth is substantial. The outlook for rates is lower. And so there's actually a lot of interest in financial assets. And so we're seeing in what we do, you asked earlier about the credit landscape, in a world where equities are so high and are at their all-time highs, and rates are drifting lower, the opportunity to make incremental returning credit, a lot of people are finding attractive. And so, again, the risk-adjusted return of investing in credit, we think, makes it an attractive asset class.
You're right. I mean, you don't really see it reflected right now, that uncertainty. But when we talk about distressed investing, do you see anything happening right now with the trade war, these ongoing talks? Do you see that being reflected at all?
So let's separate the trade war, trade discussions, tariffs from distress in the market. So we live in a world today where there's actually a very low level in the credit markets that we invest in of distress. And the reason for that is as the markets have evolved, you have a healthy backdrop in the economy, but as the markets have evolved, there's been the opportunity to refinance a lot of debt. And so today's distressed market or stressed market is probably between 5 and 10% of the overall market, which is on the low end. Really stressed is less than 5%. And so that is not a general wholesale opportunity. That's really more idiosyncratic. Companies that were acquired through a leverage buyout, businesses that were spun off with leverage, and the businesses are not performing. Some of them are good businesses and need time. Some of them are not great businesses, and even if you give them time, they need to get restructured. And so we've been doing distressed investing for the last 30 plus years. And the opportunity is really what we call capital solutions, liability management, and basically taking the debt of those companies and restructuring, adding new capital, and providing the opportunity for a good company to grow out of its challenges with the right capital structure.
What kinds of companies are you looking at right now that have opportunity? What sectors?
Look, we look across the board. Clearly in the U.S. market, we have a big business in the U.S., we have a big business in Europe. There are different markets, but certainly in the U.S. markets, services businesses dominate the economy, and so we're very active in software, we're very active in healthcare services, we're very active in industrial services, insurance brokerage, and so there's lots of opportunity across a $100 billion portfolio where we invest across a lot of industries. We don't do cyclicals, like deep cyclicals. We're not focused on making commodity bets. We really want to understand a business that has its own competitive advantage, leadership, capital structure, and we find that gives a good risk-adjusted return.
Okay, and just before we wrap up here, I mean, you talk about, across the globe, but you are looking to get more investors in Canada. I mean, you're here today in Toronto. Tell me a little bit about that, how you want to expand.
Thank you. It's great to be here. We have a great partnership with BMO. We partner with them in multiple ways. It's a deep strategic partnership. We're not only managing capital, we're originating transactions together. We're very active in the capital market side together. They're big financing source for us in our business. And we've been fortunate to have a number of Canadian investors over the years. And clearly the professionalism, integrity, amount of capital that the large institutions and medium-sized institutions have in Canada and a desire to allocate capital in the U.S. and in Europe is really high. And so we have a lot of opportunity there. We also, there's a big trend going on in the alternative asset arena, and that is bringing alternative assets to the wealth channel to individuals, because just because a teacher in Ontario has a big exposure to alternatives, the dentist doesn't. And so why shouldn't the individual who does not have a pension plan working for them have that opportunity to gain incremental return? So we have, again, a nice presence here in Canada. We're looking to grow that. I'm here for a couple of days. We had a number of great meetings. We've been coming for a number of years, and we look forward to growing those relationships.
Well, it's great to have you here today. Thanks so much for taking the time.
Thank you.
Appreciate it.
Appreciate it.
Andy, like I've been saying, lots more to come from where we are, but for now, I'll send things back over to you.
Thanks very much, Lindsay. Lindsay Biscaya talking there to Glenn August, founder and CEO of Oak Hill Advisors.